Well, welcome back to Finance Uncut. On today's episode, silver, well, it's all sold out. So the Perth Mint are out of physical silver bullion for the next 6 months. Go on and try to order some and you'll see there's just not enough stock available. And if you've got unallocated silver, good luck trying to get that allocated. John Adams shared this breaking tweet. Perth Mint client who didn't believe me just called the Perth Mint requesting to convert his 200 kilogram unallocated silver position to allocated. He was told there is no silver. They were unable to provide a guarantee as to when his request may be processed. I saw this tweet by James Anderson from SD Bullion exposing the synthetic silver scam. Now we'll have a look at this little snippet from John Adams and Martin North in their episode in the interest of the people, and I'll put a link to the full episode so you can watch it later.
There's two types of counterparty risk. Now, with a bar of silver that I own, if I was to store it here at your facility, that's a form of counterparty risk because even though it's my legal title, if I ever want to retrieve it, there's the trust that in your vault you're going to sort of produce it and it's all going to be fine. But then when it comes to these synthetic products, is the counterparty risk is that one, if I wanted my theoretical share of this pile of gold or silver, if I wanted to convert it, that they actually have the gold or silver to convert when I want it. And so timing is obviously critical. And then obviously the other point is that if I ever wanted to cash out my position, because I don't actually technically legally own anything of a tangible nature, that the counterparty has sufficient funds to provide the money, or so that I can get my money and I have to say, so you get your money at the price in which the market prevails. So, for example, if you buy something at say $5. And the price was to escalate to $100, well, obviously you would expect that if you cash out your synthetic position, you'd be paid out at the $100 price.
And I guess the counterparty risk has to take account of the possibility of it's not just you wanting to, for example, convert to silver. It could be that everybody on the same day, theoretically, might want to convert to silver.
Yes, and look, I'm glad you mentioned that, Martin, because it's no different from a bank.
Yeah.
So I mean, when you think about the banking system, we have a fractional reserve banking system. So so the bank will have a certain number of assets, and they'll have deposits on hand of a certain percentage. So while there is a small amount of deposits being asked for, the banking system works fine. If everyone was to walk into the bank today and say, "I want my money," well, then you have a bank run, and they don't have all the money there, and so that's when you have capital controls, and they say, "Well, you can't have your money." So again, now. The proponents of these products say it's 100% backed, and if it's 100% backed, there should be no run. And even if everyone was to ask for their metal today, they should be able to get it in theory.
And I noticed one of the comments from John Adams' tweet from Sean Jewell said, "True story, in 2012, I met my accountant at Perth Mint to audit the 100-ounce silver bars I had in my SMSF. That's a self-managed super fund, or for my American friends, it's like a self-directed IRA. At the time, and was paying rent to keep them there. My accountant started writing the numbers for each bar down as they came out on a trolley. The security guy said to him, 'Don't bother recording those numbers. They'll be different for the next time you come for an audit.' He was blown away as he knew the difference between allocated and unallocated. Heck, they could have had the same bars for any auditor coming in and not have the fizz in stock." So yeah, that definitely puts a light on this situation. Now, I'll put a link to the full video in the description below. But Miles Franklin CEO Andy Schectman says that the Perth Mint is not adequately serving Aussie customers, including investors with synthetic positions, that's unallocated positions. Schectman says they are giving preference to their international wholesale clients. So if you've got unallocated silver and you're trying to get your silver allocated or get your bars made up and sent to you, they don't have it. They are preferencing their international wholesale clients. according to Andy Schectman. US Mint are now cancelling orders as well. Something wrong. First it was Perth Mint, and earlier today the Royal Mint, and now the US Mint cancelling orders. Folks, the silver squeeze has happened in that physical market. They simply just don't have the silver on hand for the unallocated positions. They cannot get enough supply to meet demand, and yet the price of silver has not exploded yet. So we know that the price of silver is manipulated down. Now, a lot of people say, Steve, why would I invest in a market that is manipulated down like that? Well, I'd rather invest in a market that's manipulated down than a market that's manipulated up, because when all the manipulation stops, when this all breaks, when this all ends, we will find out what the true value and the true price of silver is. And if it's been manipulated down, that means when this manipulation ends, it's going up. Protect yourself from the next financial crisis. That's right. Need to get yourself 1 ounce silver coins and bars and everything else, because silver is money. Now, looking at gold and silver during stock market crashes, people say, well, you don't want to own gold and silver when there's stock market crashes. Well, actually, history and data says otherwise. Now, silver is more volatile than gold, and so when there is a market crash, silver will go down as well. Gold less so. I've shared in other videos. March last year, when the stock market fell 32%, gold only went down 12% in that month of March. And you can have a look here at all the different stock market crashes. You can see the S&P 500, what it went down. And you can see many, many years gold actually went up. There was only 1 year or one part, and that was 82, where even in the stock market crash, the stock market actually went down less than gold. Otherwise, history is on gold's side there, and even silver to an extent as well. So once again, other than that 82 period, and by 0.1%, May 2011 to October 2011, silver has also outperformed the S&P in market crashes. So everyone, we know that gold and silver is a hedge against inflation, but it is also, and this is Jim Rickards argues that gold actually does well in deflationary environments as well. And this is evidence that in a deflation stock market crash, gold performs extremely well, and silver not too bad as well. And so if you holding gold and silver and there's a stock market crash, well, guess what? At the end of it, you'll be able to buy more stock. You'll have more purchasing power in terms of buying the stock market and so forth. So yes, obviously, in silver's case, if you know there's going to be a stock market crash, then cash would be better than silver. But we don't know when the timing of those stock market crashes. We do know the fundamentals look towards inflation, and so I would rather be holding gold and silver, at least a portion of my portfolio in gold and silver as protection. So looking at the price of silver, when we compare what the Fed did back during the GFC and the price of silver, and we look at what the Fed is doing now, and with the Biden administration now looking to pass a $3 trillion plus stimulus package, including obviously green infrastructure, which is bullish for silver. I see the price of silver still very, very undervalued where it is today. Extremely undervalued, actually. And when you look at gold versus real interest rates, gold tracks that very well, except for in times of crises. So if you go back the last 50 odd years and you look at gold, it really tracks real interest rates very well, except for in times of crises. And at the moment, we have got a divergence in that. So yes, some nominal yields are going up, and there could be the argument that also some money has come out of gold and gone into Bitcoin. I have heard that. I don't think that's a huge factor though, but the nominal yields have gone up. But you listen to anybody, Jeff Gundlach, the bond king, billionaire bond king, says he expects CPI to have a 3 in front of it, maybe even a 4 in front of it by June. So if the 10-year rate is 1.7, 1.8, and we've got CPI at 3 or 4, well, we've got negative real yields, and that's bullish for gold and silver. And so, once again, I think gold is undervalued, looking at the fundamentals, looking at what the fiscal deficits are as a percentage of GDP. When you look at the amount of new currency units the central banks are creating, and ultimately what that inflation or CPI rate will be versus the nominal yields. And nominal yields can't rise all too much because of the debt levels that we have, both at a household level, at a corporate level, and also a government level. And so when the CPI numbers actually come out, we're going to see central banks start buying these bonds again to drive those yields down. And that will create even larger negative real interest rates. And that's just going to put a rocket under the price of gold and silver. Now, if you like a bit of leverage on the gold and silver play, like I do, then gold and silver miners. And if you have a look at the gold and silver miners versus free cash flow, you can see that, once again, gold and silver miners are severely undervalued at today's prices. And so this has just been a wonderful buying opportunity for me, buying cheap gold and silver miners and explorers. In the mining space, they're creating huge amounts of free cash flow. And once again, if you get the right management, really, really good management, then they will use that free cash flow to accumulate very good assets, especially when there's a bit of a pullback in the price of the underlying metal. And at the moment, let's be honest, gold is a little bit out of favor at the moment. And so this is where the really good managers of gold and silver miners go and buy very cheap assets. And the other thing that they're doing is, for the first time, so we've seen over the last decade since the GFC, a lot of companies in Australia, the ASX 200, in the US, the Dow or the S&P 500, NASDAQ, companies have been using cheap credit, cash flow to simply buy back their own stock. Well, now it's the gold and silver miners' turn. With all this extra free cash flow that they're generating, for the first time, they are now buying back their own stock, and you can see that in this graph. So whether it's gold and silver, the physical, we know that it's manipulated down. However, the cracks are now showing. This cannot last forever. We're seeing mints cancel orders. The supply is just not there to meet the demand. And the price, all the fundamentals, whether you're looking at the deficit as a percentage of GDP, central banks' balance sheets, when the CPI numbers start coming out and we see the negative real rates, all of this is just going to put a rocket under the price of gold and silver. and therefore on the leverage play, the gold, silver miners, and the really leverage play, the gold and silver explorers, I just see this right now, the time that we're in right now is a golden opportunity to accumulate more gold and silver, physical gold and silver. For those of us that like a bit more leverage, the gold and silver miners, and those who really like the leverage, gold and silver explorers. Now, I think, is probably our last opportunity to do so. Maybe we might have a few more weeks, maybe a few more months. But we'll be really pushing it if we're waiting to the end of the year or to next year. I think it'll be way too late by then. So anyway, there it is, folks. The silver is sold out. You cannot get it. You cannot convert to allocated from unallocated. Demand is outstripping supply, and we know ultimately what that means in terms of price direction. So if you like this video, hit the like button. If you haven't yet subscribed, please do so. Hit the notification bell so you get all my videos when they come out. Also share it with your friends and family. Really appreciate it. Love to see your comments and your opinions and all that in the comments below. Otherwise, I'll see you again on another episode of Finance Uncut.